how am I supposed to interpret this, John? As far you mentioned, it's an inflation move, and obviously it is. Are they worried inflation is about to get worse? It's already really bad. Is this a signal for that they're concerned about the future? Is this what has already happened? How am I supposed to interpret this?
It is a concern about the future. Not that inflation is going to get worse, but remember, the Fed believed, just like the White House, that this inflation was transitory, that it was going to go away, fade on its own. It was all supply chain driven. This was a mistake. It's not. Inflation has become more entrenched and more widespread in our economy. It has been fed by the massive amounts of spending that we've had. So it wasn't just supply chain problems. It was the fact that we introduced another $6 trillion of government spending into the economy. If you do that, you will get inflation. So what the Fed is saying now is, okay, we realized we messed up. It wasn't transitory. We thought inflation would be a lot lower today than it is now. So we are going to have to increase interest rates up to, a level where it starts to actually restrict the economy, where it starts to constrain economic growth. It constrains demand for labor, meaning people will get laid off. The Fed is aiming to bring down home prices. It wants stock prices to be down. It wants more people to be unemployed. And it doesn't want those because they're a bunch of big guys. It wants it because they think this is what they need to do to get inflation down.
Okay. Are they still printing money?
Well, unfortunately, we just had the Biden administration say, you know what? We're going to forgive on our own around, a couple $100 billion of student loan debt. That's an inflationary move. We passed the Inflation Reduction Act, which actually does the opposite. It is inflationary, at least for the next couple of years. Any deflationary effect it has will come years and years from now, too late to help us at all. So we've got this problem of nonstop spending. And when you spend this much money, trillions of dollars pushed into the economy, then you will get inflation. And we're not doing anything on the fiscal side to stop spending. And until we do that, the Fed it actually makes their job harder. And it means that we're going to have higher and higher interest rates because we keep spending too much.
Okay, well, I don't mean to be doom and gloom guy, John, but that sounds like a problem that is without end. Washington is never going to stop spending. They're never going to stop printing money. So we're going to see never-ending interest rates until they're 100%. How does this ride end?
Well, so that's a good question. A lot of people think that the Fed will get inflation under control pretty early next year. I think that's way too optimistic given the spending problems. It could be, if we get Republicans elected into Congress, that we will no longer be in danger of unending spending if the Republicans actually are able to control themselves and not spend. That's not always clear. But I think gridlock in Washington will help bring down the spending a little bit, and that will help the Fed in its attempt to bring down inflation. But frankly, I don't think we're going to get back to a normal, healthy level of inflation, 2%, until probably 2025. So this is going to be a long road of high rates, and it's going to take us take a lot of economic pain to get there. I think we have to see unemployment go above 5%, and that means a lot of people losing their jobs, and that's not going to be painless.
No, that's okay. I've got to ask another dumb question on this, John, because I just want to know how it applies to people's lives. So you're telling me the money I have in my bank account is going to slowly but surely lose value until the year 2025, that it's going to be worth even less by 2025 than it is now? Is that what you're telling me?
Yeah, that's exactly right. Not only that, though, your stock portfolio is likely to go down, your home value is likely to go down, and the financing for everything you want, from cars to if you want to buy a new home, is going to be a lot more expensive. Your credit card rates are going to go up. So it is going to be a tough few years ahead economically.
Don't miss Jesse Kelly Breaks History, The Forgotten Genocide, the first episode of a new series available now exclusively for First TV supporters. Visit the First TV app or thefirsttv.com to subscribe and start watching today.